Welcome back. The coronavirus spreading across the globe. As we told you, the death toll now up to better than 360 people, including the first death outside of China. There are now more than 17,000 confirmed cases across the world of coronavirus. The numbers already surpassing the 2003 SARS outbreak. I spoke with former White House Chief Strategist Steve Bannon on Sunday Morning Futures yesterday, and he talked about the economic impact of this virus. Watch. Because people are worried that the first quarter, write it off in China, right off the first quarter, that's going to hit the U.S., isn't it?
Here's what I think people ought to start focusing right now is the third quarter. In China, if they don't open these factories, if they don't start to drop these quarantines in the next couple of weeks, you're going to have real impact.
Joining me right now is Baltic Capital Markets Head of Global Research, Kathryn Rooney Vera. And Kathryn, it's always great to see you.
Thank you,
Thanks so much for being here. So we're looking at a strong backdrop right now, but what happens with that third quarter? If China completely shuts down, doesn't that impact economic growth? Is that what's behind this market sell-off? And how serious do you worry about it?
Well, we can expect to at least take off 2 percentage points from Chinese GDP. And I say at least, Maria, because in 2002, 2003, with SARS, we saw exactly 2 percentage points come off of Chinese growth in 1Q and 2Q of 2003. We later saw that demand was not destroyed, but rather delayed. And that's what I'm looking for, is demand destroyed, is demand delayed. If it's the latter, Maria, then you get a strong rebound in the latter half of the year.
But look at even, putting into account other things, like in the Journal this morning, they're talking about Boeing and the fact that the Boeing stoppage of the 737 MAX, that's going to take another 0.5% out of the first quarter. So you've got these things building up. It doesn't look like a 3.5% growth story in 2020 anymore.
Right. Let's say it takes 0.4 of a percentage point off of global growth, which I think is a very good baseline. It could be more if you get a combination of variables. If you get consumer confidence plummeting, let's say, for example, Bernie Sanders wins both Iowa and New Hampshire, that could exacerbate global trends. As you mentioned, transport and retail. Those are the two sectors I'm most concerned about with regard to China. China's an economy that's increasingly dependent on domestic demand, which is going to get slaughtered. So what I'm looking for from an investment perspective, Maria, is to invest in moments of real panic, because I do believe that ultimately, if you look at SARS, Ebola, Zika, MERS, eventually you do get an economic rebound. Unless is this a global pandemic and Black Death, which I doubt it really, who knows? But
So look for serious sell-offs to buy stocks? Is that what you're saying?
I am saying that.
Yeah.
I think specifically in the consumer discretionary sector in China.
Let me ask you about the Iowa caucus. As you mentioned, Bernie Sanders, 2 Democratic candidates seem to be moving ahead of the pack, and that, of course, is a Wall Street Journal NBC poll shows Senators Bernie Sanders gaining ground, moving slightly ahead of former Vice President Joe Biden among Democratic voters nationally. You have some concerns about Biden's surge. Obviously, he's got socialist ideas. What does that do to the economy if, in fact, he's the nominee?
More than 50% of the S&P 500 is comprised of tech, healthcare, financials, and energy. Those are the 4 sectors, I would say, that the Bernie Sanders camp will most hard hit. That's why specific trade recommendation, Maria, I like buying puts with March 31st expiry, because that gets you through Iowa, New Hampshire, and Super Tuesday. If Bernie Sanders clean sweeps, then I think you get a very strong market correction. If you get the consumer and small business confidence, the backbone of the U.S. economy, that plummets as a result of any increase in his potential as the Democratic nominee, then you will get a pullback in GDP growth.
He's trying to rally young people. Young people, some of them, I don't know that they understand what these socialist practices could do to the economy.
Right.
What if he were the nominee against Trump?
Well, I would think that the U.S. being capitalist and seeing how well we've done under a capitalist structure, it would be largely rejected.
Okay. Kathryn, it's great to get your insights.
Thank you, Maria.
Kathryn Rooney Vera joining us here in Miami.